Hi, welcome to this podcast. We're going to talk about days sales and receivables, which is a more common ratio, more commonly used ratio than accounts receivable turnover. So, days sales and receivable is an efficiency ratio. Again, it falls under the category of ability to sell, inventory, and collect receivables. It is a two-step formula for days sales and receivables. And a lot of students only do the first step. So the first step is we calculate 1 day's sales. We want to know an average 1 day's sales. So we take our net sales, we divide it by 365, and this gives us our average 1 day sale for the year. We then use that information to divide it into our average net accounts receivable, and that tells us on average how many days it is taking us to collect our receivables. This is actually a very important and very common ratio used not only by investors and creditors but also by the management of a business. Another way this is commonly expressed is as it is called days sales outstanding, and frequently abbreviated DSO. So let's go ahead and get the information that we need here. So we need our annual sales, and we're going to divide that by 365, right? We're going to divide it by 365, and that's going to give us our there's no way I'm going to write this correctly, days. That doesn't look that much worse than what I do on the board. 1 day's sales. Boy, I've got to stop drinking before I do these podcasts. That's his sales. Okay, so 1 day's sales. The next thing we need to do is figure out our average accounts receivable, and we did that on a previous podcast. So we take our beginning plus ending, or beginning plus ending, divided by 2. And so we can go ahead and plug them in here. So our 1 day sales, we get 5,745.21. Our average accounts receivable, 205,000. So we take the 205 divided by the 5,745, and approximately every 36 days we are collecting our receivables. Now, is that good? Is that bad? What would we measure that to? Well, we'd probably compare it to our credit terms. If we were extending credit to customers that said they need to pay us every 30 days, and on average we're collecting every 36 days, we're taking almost a week longer to collect our receivables than what our credit terms are telling us. And so we would say then that we actually need to improve and work on that area. If it were 45 days is our standard credit, then this would be perfectly fine. Okay, that concludes our days sales in receivables.